S&P 500 up 0.75% right now. Let's look at the technicals with Mr. Kevin Green joining us, our senior markets correspondent. KG 6100 we talked about as kind of being a magnet with all of that call flow action happening. So does that happen as a wall now, or does it turn into a trampoline for us?
It's definitely a wall for right now, at least for the remainder of the session here, Oliver. For us to kind of break through, we would need to have a fair amount of momentum and more participation in the market. But what we actually have done when you're looking at the open interest chart is actually move the levels already, just based on the options flow today on the volume side. The market is rolling up and rolling out. They're looking at the 6190s, 6200 calls to the upside on these collars, and they're rolling up a lot of these puts as well, looking at the 6,000 levels. So before we even wait for the open interest for tomorrow, we can already move these up just based on just the flows here today. So let's look at the bigger picture. We had that drawdown in the market, right? We lost the 20-day moving average. We had that bear cross, but now we're obviously testing a very key level. Now, this could be a breakout level to the upside, as you kind of talked about. And so usually when we get close to these levels, Oliver, I look at these drawdown breakout extensions. Since we hit 6,100 in the past, and then we hit those lows or go to those lows, if we kind of map that out as far as that drawdown, it was sitting at around 320 points to the downside. So now what you want to do for a longer time frame is add that drawdown to the top of that range. And that gets you to about 64.20, which obviously is a long way from here, but on this trajectory that we're going, it kind of says, you know, that could be within reach if we are starting a new cycle trend for this bull market that we have been in. So that's something to kind of be mindful of. But yes, we continue to see a lot of enthusiasm. The NYSE advanced decline line did actually move to the downside here today. We talked about this dispersion trade. And I want to kind of clarify what that means. It just means that there's a trade out there where you can find outperforming sectors or stocks that are going to outperform a broad-based index. So that's really looking at the concentrated sectors like communication services and technology. You can see individuals going along those and then potentially shorting the broader index so they can actually make more alpha on that spread. And that's kind of exactly what we saw today. Outperformance from pretty much every single sector, or underperformance from pretty much every single sector, except for communication services and technology. And we had that MACD cross once again. We officially broke through that zero line. This is a bullish trend for now. And so if you're looking at it from a technical standpoint and you want to play the breakout, that's kind of the breakout levels to the upside. And any type of pullback, you're still looking at that channel line that we used to have as area of resistance turning into support. That also aligns to the 50-day moving average. Even if you had that pullback going back down to that 6,000 level, technically this is actually still good and bullish for right now on the longer term time frame.
So the MACD signals bullish. The advanced decline has been good, and it is sort of almost like a win-win, because on those days where the advanced decline ticks down in favor of tech, you get some of your most powerful days for the index, given the market cap power of big tech. So it looks like, I mean, we're pretty much, firing on all cylinders right now.
We are, and I'll give you a little bit more, bullish color, if you will. If you're looking at that Mag 7 ETF, what's actually very funny, we have the same type of technical setup that we saw for the S&P 500. The S&P 500 now has completed the channel breakout to the upside and is now testing new highs. But when you're looking at that Mag 7 ETF index here, check out this setup. Same exact setup that we saw before when you're looking at the S&P 500, but it just actually completed its official breakout of this channel today. Also, we had that hammer candle that actually defended that 20-period moving average. Remember what we talked about, not all the time, but usually buyers like to step in when you have those handles, a flush to hammers. You have a flush to the downside, you're able to recover. We were able to recover that 20-period moving average. We were able to basically overcome that channel line. So the Mag 7 still has some room to run to the upside to try to break through this pullback that it's had. So that rotational trade that we kind of talked about also carries merit when you're looking at the price action of this ETF and where you do get some potential opportunity here. So that's another bullish take on the market. If you were thinking that we have a breakout, the breakout actually could be sustained and fueled by the Mag 7, which has actually a lot more ground to actually make up in order to try to recapture the highs that we saw back in, on December 18th. So this is another bull case here.
Yeah, as good as any out there when the reliable names are breaking out. Like the chart work there, finding the breakout, finding support for mags. It's fun for stock pickers. to see days where breadth improves and more companies advance than decline. That's fun for those that trade that way, but for a lot of people, that chart there is going to matter the most as their broad market funds have the winners and the generals back out in front. KG, is there anything related right now to volatility compared to stocks? I know we're always kind of like on the lookout for when those things correlate for interesting moments of high speculation. Where are we right now?
Yeah, we're in a VIX up, stocks up scenario. VIX up a little bit here today, a little bit positive, but that's something to just keep on the radar. We continue to hold that 15 level. And the S&P 500 obviously is up about 0.7% right now. And if you're looking at it on an intraday basis, we actually need to hold this 60-90 level before we actually have a bigger breakdown. But a VIX up, stocks up, we highlight this anytime that this does happen. And usually that just shows that we may have froth in the market, maybe some exhaustion here. So here's kind of the bear case. VIX up, stocks up. Maybe there's something that's on the horizon, just something to be mindful of. You can also make the case that this is actually call side skew driven. I would submit that might be actually the case for right now when you're looking at that. On the radar, though, Oliver, if we kind of look at the next 24 to 48 hours, the Japanese yen and the Bank of Japan is going to be on the radar here. We are expecting a rate hike, of 25 basis points. That's going to be the largest increment of rate hikes for the BOJ since 2007. And so when you're looking at this type of scenario, the last time we had this low of vol, this is kind of showing volatility of the Japanese yen to USD pair, lowest vol since we've seen since July of last year. July of last year is when we actually saw that breakdown, that yen carry trade started to get into the picture. If you're also looking at positioning, leveraged funds, largest short position, biggest short position since July of last year. So there's also something that's going to be on the horizon. Let's see how the market's going to react to this rate hike. It's going to be a very aggressive one. The commentary is going to have to be able to match. Do we see the yen actually strengthen here? And is that yen carry trade narrative kind of peak back up in the markets here? This is the one thing that I'm kind of keeping my eye out on for the remainder of this week. As I kind of talked about the other day, seasonally volatility does get a little bit higher over the next week to 2 weeks here. Could this be the catalyst in order for us to do so or see vol go higher? Just a radar item. I'm not saying the market's going to go down, but very interesting structure knowing that we're that much on the short side. Volatility is very low, and you're going to see the most aggressive hikes in a very long time.
All right. Well, the beat down that the dollar has put on the yen over the last 4 months seems like maybe we've primed the pump a little bit for some potential volatility there. Good stuff. Good eyes on the calendar around the world. Thanks, KG.